Hey everyone, welcome to Live Trading Thursday. My name is David Verbruggen. We got some good stuff to look at in the market today. I'm excited to do that with you. I would like your help though. If you can go ahead and submit any tickers that you want to look at, any questions you have, trades that you want to look at that you're considering, maybe trades that you're in, we can even look at some historical trades. Go ahead and get those tickers submitted. These always go so much better when we have a lot of student interaction. So go ahead and do that. That would be super helpful. And keep in mind to get those in quickly because we only have about 15 minutes together here. So if we go over, then we're not going to be able to get to all the tickers at times. But keep in mind that all these examples in this live trading session should be viewed for educational purposes only and not taken as trading investment advice. So with that, if you're enjoying these guys, I just ask that you would click that like and subscribe button on YouTube. That would be awesome as well. Help us out there. Fantastic, guys. Let me go ahead and share my screen, see what we got going on today. Big update today. Actually, let me zoom in on that a little bit so you can see, wow, look at that. So big update today. Looks like some fears might be calming down. We're going to talk about that in a little bit. But you can kind of see almost this rolling action going on, right? I want to zoom out again to the 1 year. You can see this bear market. It was lower lows, lower highs happening. And then we had all of a sudden slightly higher lows, slightly higher highs. So are we getting out? Are we starting a slight uptrend? If this is an uptrend, it's going to be a very shallow uptrend. Almost looks a little bit more like a roll. So we're just going to have to see on that end what is going on there as time continues. We'll zoom back in there. You can see on the shorter term that we've got maybe a little bit of a wedge going on. You can see this downtrending resistance line already got 2 touches. And with today's candle, who knows when that third touch might happen? It could be tomorrow. So if we hit that line and we roll over, bounce down tomorrow, that might show that this downtrending resistance line is in effect. And now you pair that with this slightly uptrending support line, could have a little bit of a wedge going on. So we'll have to see which direction we break out then. Wedges generally tend to break out in the direction of market tone. Well, what has market tone been the last week or so? Not so great, right? It's been more negative than positive. This would suggest, if this is a wedge, that we more than likely would break out to the downside. Now, I say that, and I also recognize that, especially in the last year or two, this market has been highly unpredictable. It's made it very difficult to trade. So I also would not be surprised if it breaks out to the upside. Nevertheless, this kind of a setup puts us in a difficult spot, right? It makes it hard to trade right now. So let's take a look. Let's zoom out a little bit, not necessarily on the screen, but I want to look at some other metrics and see what's going on. If you open up charts by TRADEway, this is going to be the very first screen you have. And in the top left, you can see a smaller chart, and you might have it defaulted to the Dow Jones. You could set it up for .spx. I like the VIX. So what is the VIX? Let's go ahead and just very briefly define the VIX as the fear index, right? It's almost like we can measure what fear is in the markets, right? And you can see that it's been pretty steady for the last few weeks, and then the last week has just shot up, right? And this is a lot of fear with the whole, the banking crisis, if we can call it that yet, because there's a couple banks out there that failed. And what does that mean? Are we going to look at this massive financial crisis and downturn? Still too early to really say on that, but you can see that the fear definitely jumped up. Let's go ahead and look at this on, we can put this on the bigger charts here too. So if I just type in .vix, now I can look at this fear index, and you can see it was high, and then it came back down quite a bit. And now you've got the last week here. So that is the VIX. We can compare this now also to the SPX. So let's do that. Oh, there's actually a great place here in the, if I go to hover over home and I choose my custom page, we don't talk about the custom page much, but there are some good things in here. It's great because you can just customize it however you want. You can put a quote box, you can put a news box, you can just add widgets. I set up 2 different large charts so that I could look at the SPX alongside the VIX. Now check this out, right? As the SPX was starting to make higher highs and higher lows, right? You can see that the VIX had gone down. When the S&P, when it was crashing there, the VIX had been pretty high. But then when the S&P started to do better, there was less fear, and so the VIX was lower. Up until the last week, we have this banking crisis. You see these massive candlesticks down, right? 1, 2, 3, and the VIX just skyrockets. So you can almost see how the S&P works inversely at times. It works inversely to the overall market. So it's just kind of a nice indicator there. There's a lot more to the VIX, but for now, we're just going to look at this as a fear index because that kind of gives us an inside look to how people might react. All right, so that is, of course, a big, intro explanation, just something I wanted to show you guys because I thought it was quite interesting. Henry, thanks for being on. I really appreciate the participation there. And Henry wants to look at NVIDIA. So let's do that. That's what we're here to do after all, right? This is Live Trading Thursday. So let's take a look at some tickers. Let's see what we can find on NVIDIA. Ooh, NVIDIA, that one's actually looking nice. Look at that. I love this, Henry, because you found a ticker here that's not participating in the fear. You can see here. Let's look at one that looks like it's fearful, right? MRO. I think that one is. Boom! Look at that. There you go. So it's been doing great, and then MRO just kind of dropped off the cliff there, right? There's many others out there. NVIDIA is fine, right? So I love that you brought this one up. So what can we do here, right? We've got that was almost a bounce off the 20-day right there. It's a little bit lower, but a few days ago, was that Monday? I think Monday. That was a beautiful bounce off the 20-day, and it kept moving up and up and up. Now today is not your buy point, right? This is far extended. I would hope that this thing would actually pull back, maybe give us another bounce off the 20-day. How nice would it be if we could draw a line right there and maybe it moved up a couple more days and then it came back down, put in a bounce off that line right around the 20-day. That would be pretty fantastic. If this stock had done some more 20-day bounces beforehand, if it already established that pattern, I would have looked at Monday as a buy point. And if you had gotten in at the end of Monday, right around 229 a share, 229.52, somewhere in there, then right now you'd be very happy, right? Because it's already made a nice move up about $22 or so. It's about 8% on the stock. It's pretty good. Imagine what that would be on the option. If you did a step 2 option, that could be, I don't know, 50% or more profit on the option. A debit spread, you could be looking at over 100% profits. Now, I personally like the credit spreads. What if you were to have structured a credit spread with the short strike below the 50? We're not going to dive into all the numbers on that right now, but there's a potential that you could have made a 15% profit with a high probability win. And if you were looking to take 50% of max profit, you might already be out with today's move. So this is a great one, Henry. This is a great one. I'm glad you brought this one up. It's definitely, it's over the last 6 months, it's wanted to uptrend, move down a little bit, and then wanted to uptrend again. So I would put this one on a watch list, and I would keep watching this one. And then I might see what trades could be structured for the next time it bounces off this line or the 20-day. If it does. Remember, we want to wait for the bounce, right? We don't buy at support. We don't wait for it to bounce up off of support. But then there's a variety of different things you can look at. So that's a great one, Henry. Guys, if you got any other tickers you want to look at, go ahead and throw those in. Same thing for you, Henry. If you got any others, throw those in as well. Now, I mentioned earlier the banking crisis and everything, so I wanted to look at something again. Here we got again the first page that we see when we open up charts by TRADEway. If you look at the top right here, you can see the sector chart, and it's all over the place right now. I have it set for 1 week. This is what's been going on the last week, and you can see the sectors that are down and the sectors that are up. And it almost seems like most sectors are either down quite a bit or up quite a bit, right? And here's financial services down 7% this week alone. And that's been the big one in the news because of the bank failures that have been happening, right? But what about energy? Energy is kind of a wild one because it's either up a lot or it's down a lot, right? I mean, we look at energy over the last year, and you can see actually it's the only thing that's been up, right? And it was up a whole lot more at one point, but it's gotten hit down a couple of times. So it's not up as much. But you look at the last month, it's down a lot. You look at the last week, it's down even more than financial services. And we saw that with MRO. But there are still some industries or some sectors that are doing well. Communication services, for example. So we could do that. We could look at communication services using the heat map down below. I like to just hit the go big button right here, make this guy bigger, and then hit communication services. You can see it's still set on a week for the time frame. Google, Meta, they're all doing well. Netflix doing well. You've got some that, Verizon, T-Mobile, if it's black, you can see the top right here, the legend. So if it's black, then it's more kind of even, right? Break even. And then you've got some that are down a little bit. Disney is down a little bit. So you can use this to see, okay, well, what is doing well? Maybe I want to take a look at Meta and see, hey, are there trades available in here? Look at that. Meta has been doing pretty well. 4 or 5 months ago, whatever November was, down at $88 a share. It's more than doubled. And that's in the last, 5 months. But this last week has been doing well too. Last week, we had a student ask about a potential debit spread on Meta regarding this buy point right here. So we drew it, and I remember saying it has the possibility. I mean, it's a nice chart, nice. It's a nice bounce off that 20-day, and it had been using that as support. And look what happened. It blew right through that. If that student took that trade, they surely were profitable. And if they're still in it, they're pretty close to a max profit. So that's another way you can look for trades. All right, Henry, I see you loading it up. I love that. I love that. Thanks for that. We're going to look at Avgo. Let's take a look at Avgo. Broadcom. So here we go. Here's another communications one, right? It's been doing well. So Henry's 2 for 2 now on finding a beautiful trend. The market can look scary, guys. The market can absolutely look scary. But when I look at this, I'm like, okay, all right, there's some probabilities in our favor. There's some edges here, right? For most of the time, Avgo was bouncing off the 20-day. The 20-day was support, right? It was acting as support. It did weaken a little bit and used the 50-day support, popped back up, and recently used the 20-day support again. Now, if I'm going to draw some lines on here, I might want to throw this line on. Is that a resistance line? Is that something we need to be worried about? Potentially. So the conservative trader might want to see that line broken first. The more aggressive trader, conservative or aggressive, I'd rather still wait for a bounce off the 20, right? And then if it were me, seeing that it did move down to the 50 recently, I'd rather go for that credit spread structure below the 50-day than a debit spread or a step 2 call. So that would be my preference on this chart, but that's a good chart. Thanks, Henry. And look at that, all greens on the boxes. All right, that's just saying that the technicals are looking bullish. That's saying that the big boys are invested, right? The insiders, they're in on Broadcom. The valuation is good, so that means that you've got a stock that's not overpriced, considering all the other factors. And you've also got the fundamentals are good as well. All right, Henry wants to also look at a net. Let's look at a net. Here we go. This one, this is also a good one that Henry brought up. So Henry's 3 for 3, and I like that. I like that. Let me zoom out to 1 year. You can see, oh, I remember looking at this one last week. This is a fun one because it was making some big moves, right? Oh no, but look at this. Okay. All right, this is fun to look at. It just broke the pattern, right? It had some nice uptrending action, and if you could catch a bounce off of the support line, you could be looking at a nearly 40% move on the stock alone, right? So that's a pretty big move up. But then the last few days, you know, Annette's not fearful, right? The overall market might be fearful, but Annette just broke through that resistance line. I remember talking about a potential put, and it's like, we don't want to do a put. And this was last week in, I think, Live Trading Hour. Someone asked about a put on this particular stock. We don't want to do a put in an uptrend. We don't want to trade counter trends. And look, this is why, because sometimes it just does this, right? Big moves up here. Now, the hard part, Henry, is that this makes it harder to trade now, too. Could this be an anomaly? Could it come back down and bounce up off support? Yeah, it could. It could. But we would have much rather seen this thing actually come down, right? Because if we were in it, let's say we got in on this day and we were in it, we probably would have sold actually maybe on this day, or at least on this day. We would have already been out, right? We probably wouldn't have held on because there's no way we could have known that was going to just rocket up like that. This was a really nice pattern and it just kind of broke it. So this is actually kind of sad, even though it looks kind of cool. We'd actually want it to move down and then bounce up because now we got to wait for a new pattern to develop. Now, could that be a steeper pattern? Could that be something like this? It could. We'll just have to wait and see. All right, fantastic. Benjamin, I see you're on there as well. Awesome. And David, first time live. Thanks. Welcome to Live Trading Thursday. I'm glad that you're here as well. All right, we've got 3, 4. We'll do 4 more. We're going to look at the 4 that Benjamin threw in there. I appreciate that. And we're going to kind of rapid fire these. All right, so we're going to look at Tesla. Tesla is always a volatile one, right? Interesting one to look at. Big downtrend, changed that, went to an uptrend, hard to catch uptrend. Tesla's always going to be hard to catch, I feel, with their trades. A little bit of sideways, started to move down. Now, this is a little surprising to me. I thought Tesla was going to keep moving down, potentially even to these lows again. But now it's turned around again. So a little less predictable. So could you trade Tesla? You could always trade Tesla. You could always trade anything you want. But the question is, what's the pattern? What is the pattern that you're seeing? I see that there was a downtrend, and then there was a steep uptrend, and it's been a little ambiguous. And it looked like a downtrend was going to start to form, and now it broke that again. So what's the pattern? If there's no pattern, it's hard to have an edge. It's hard to trade it. All right, next one, we're going to look at Apple. Let's take a look. Apple had been downtrending, moved up, and then just kind of sideways here. You can see a student asked about a potential bear call credit spread here. This is this is why I like these boxes that are left on the chart here, because we can always look back at this, right? They asked about it on this day. Now, if they'd gotten in on that trade at the end of the day at about 150, the trade is going against them, yet they could still be making money. The cool thing about a credit spread, especially a well-structured credit spread in a safe area, this is beyond the resistance line. So as long as Apple doesn't continue above the resistance line, this credit spread is going to be safe. So we'll have to see what happens there. But right now, just kind of moving sideways. I wouldn't get bullish on this yet. If it bounces down off of resistance, potentially a bearish credit spread again could work. All right, that's Apple. Let's take a look at MRO from Benjamin again. We briefly looked at this one earlier. You can see this thing dropping off a cliff, right? That's what a lot of energy's been doing. You remember looking at that market, on the market page, the sector chart. Energy is actually down more than financial services is last week. Energy kind of tends to make some big moves. You can see it was a really steep uptrend at a time when most things were starting that bear market. And then May came along and it just tanked, right? Since then, a little bit up, a little bit sideways, and now it looks like some tanking again. So that's MRO for you right there. Definitely wouldn't get bullish on this because we don't want to catch a falling knife, right? I'm not going to look at today's candle and go, that's a buy signal. No, it's not. That's just an update because it needs to also rest when it comes down, right? Do you want to catch a bearish move? You can try, but it's tough. Maybe if you bought a put off a wick down off the 5-day, if you did that and held for 1 day, you'd be happy. But those are hard to catch. Those are hard to catch, and you got to be ready to stop out like that if it breaks the 5-day or if it starts to move against you. All right, last one we're going to look at today is General Electric. General Electric. Ooh, this is another nice one. Ooh. Oh, Benjamin, this one competes with the tickers that Henry pulled up. You know, this is a really nice move. 20-day acting as support there. It's gotten a little volatile, right? It's got, you can see nice quiet candlesticks, and then these are kind of like loud candlesticks with big wicks. And what is going on, right? So General Electric a little volatile, but still that bounce off the 20 and a move up again. So hopefully that volatility can maybe decrease. You see that, and you look at the options. Let me get rid of the, I don't actually want to look at the expirations right now, but you look at the volatility, you can see that the volatility was really low and it started to increase. It's almost at the average level for the last year, right? So this is where I might start to think, would it be a good time to sell options? So maybe do like a bull put spread, right? Because you can get paid more for them because the volatility is higher, which means that the options are more expensive. So maybe I want to sell them when they're higher, right? So this is where, you know, I see some of this and I see that volatility has increased. Maybe I'd be better off selling options versus buying options. So there you have it, guys. I'm going to leave you guys with something because we talked a lot about a lot of good stuff. But we have a trading jumpstart challenge, and that's going to be starting March 27th. That is 2 weeks from now. 2 weeks from now on Monday. And this is a fantastic opportunity where, you know, if you're newer to trading or you're getting back into trading, you're going to have an opportunity to look at things with the coaches, talk through some practical steps. I'll be on there as well as one of the coaches on Monday and Wednesday. It'll be 2 to 3 hours each day. It will be recorded. So if you can't make one of the sessions, you can still have those available as well. And it's designed for, you know, just getting back into it or new traders. And we'll be looking at things like we did in the market today. You know, we talked about a lot of different things in today's session, but you can't really go in depth, right? This is going to be an opportunity to go more in depth on some of the things that we discussed. So it's going to be really great. I hope you can join. That link is in the comment box, both Facebook and YouTube there. That link is to the Zoom page, so you can register for that. So check that out. That'll be Monday through Friday in a couple weeks from now for about 2 to 3 hours each day. So I look forward to the next time I'm going to be with you guys, but that'll be 3 weeks from now. Next week, I believe we have someone that's going to fill in for me while I'm traveling. And then I believe the week after that, we're actually going to take a 1-week break. That might change, so stay tuned. But it might be Jeffrey or someone else filling in next week. And then I'll be back with you that first week of April. So we'll see you guys then. I'm sure the market will look completely different at that point. So it'll be interesting to see what's going on then. We'll talk to you guys later. Thanks.